My name is Tina Yu. I'm a principal on the investment team at KSL Capital, which is a travel and leisure private equity firm that invests globally into the sector. We invest everything from hotels to restaurants to spas to ski and golf. And I guess you could say that we turn our avocation into our vocation. My firm only invests in travel and leisure, and so I think it's very useful for us who are only investing in a subsector of operational real estate to be able to meet people from across the different other sectors and really learn about what they're seeing in the market, ultimately the trends that underpin in terms of macro factors and consumer demand trends. All of our sectors are the same, so I actually really like and enjoy the debate. To me, human connection and networking is quite important. You just don't get the same level of connection when you're talking on Zoom. I don't believe. Maybe I'm a bit old school, but I really enjoy these types of things. I define it as anything where you can have multiple levers to pull in the context of the real estate you own. For us, in hotels, we like to say there's a smart mouse knows have multiple holes to run to. So, you can impact the upside and and mitigate the downside by being able to have different revenue levers and different cost levers. I think there's a lot of investor interest into our sector today in terms of investors who traditionally have been more passive real estate investors who understand better the risk associated with travel and leisure and are more comfortable taking that risk because they see sort of the tailwinds in our sector and our ability to outgrow inflation and interest growth. It's a good question. I think, for me, the discussion that's always missing when people are talking about how operational real estate brings operational risk is that it also brings rewards. It's a great risk-adjusted return if you have a great operator and people who have experience in managing these assets. What we used to see is landlord and tenant relationships were much more straightforward. There were fixed leases. Now you're actually starting to see more landlords wanting to take a little bit of that upside with their tenants, and so you're seeing these leases become sometimes more variable, sometimes with upside participation. So I think that's quite interesting. My panel was about capital providers' interest in operational real estate, and so that was our perspective in terms of, I bet my career investing in operational real estate, and so it was really to give perspective on why we do so. Disagreements. I don't know if we really disagreed on much. We were quite diverse. We had people who were investing in life science and student housing. We had a lender, and we had a more research-focused panelist who came from ULI, and myself who only invest in travel and leisure. And so I think it's less about disagreements and different perspectives, really. I think we all agree that it's important in this challenging environment with the interest rates going where it is, with inflation where it is, and the macro climate where it is, to have levers to pull. Like we do in operational real estate.